Hello and welcome, CFT members, to this daily market report brought to you on behalf of CommunityFT, in which we're going to take a look at some major potential movements to occur over the next 24 hours. But before we do that, everyone, at this point, if we can embrace a quick risk warning, so if we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. Okay. So, within our scope this morning, you might say, we're going to take a look at some economies, the value of those economies as is reflected by the value of their currency, and let's also take a look then at a commodity or a precious metal, and for that we'll look at gold. Now, a couple of interesting things here, guys, okay? Ms. Janet Yellen, whom is the chairperson of the Federal Reserve in the United States, spoke yesterday, and after that announcement, or public speech, very little happened to the market. And the reason we might expect something to happen to the market after her speaking is because she is the one who is tasked with delivering to the public in a mass communication manner exactly what is the status with the US dollar's short-term interest rates, or interest rates for the currency. And the interest rate for the currency itself is inextricably linked to the value of that currency, because of course the interest rate itself usually dictates the demand for the currency, and because of the supply and demand dynamic, we could see a move in the currency itself. We'll also take a look then at gold, and what's interesting here is how correlated gold is to the US dollar, because if the US dollar is not somewhere that's seen as investment worthy, a safe haven asset class like gold can often be the next port of call. So speaking of, we're now looking at the daily chart of euro versus US dollar. What we're looking at in front of us, folks, I'm going to just sketch this in, and I'm going to get somewhat active with graph lines here, okay, is overall an uptrending channel, okay, or a bullish channel. Now, for those of you who aren't familiar with that term, what it effectively means is that the high prices move upward with a similar gradient, and the low prices move upward with a similar gradient also. Now, that's of interest, okay, because what it can often show, or be a telltale sign of, is this sort of upward or incremental support and resistance, or almost you can consider it tilted support and resistance. So in terms of looking for opportunities therein, we could look and say that should the low prices stop following that pattern or gradient, it could be a sign of short positions to come. Or that could be further confirmed, if you will, by the stochastic oscillator and whether or not it's signaling an overbought or oversold market. And one who's being extremely diligent might often look for the 55-day exponential moving average here for more confirmation. Okay, enough about that, and let's talk about gold. This is the daily chart of gold. And what we can see here is another pattern, okay, another classical pattern or technique used by the technical analyst. And that is the technique of recognizing and establishing a descending triangle. A descending triangle, very simply put, is when the high prices of a given asset class move downward with a similar pattern toward a point, and that point, that horizontal point, would be the most recent support, okay, or established support, and we see that we have established support in this region here. Now, this can be indicative, or this can often signal positions such that, or whereby I should say, we might look for long positions, or it could be a signal of more ranging if the market is to go outside this ascending or descending triangles diagonal here, which it has done, and it almost seems that if gold is actually deciding whether or not that will be its new, you could consider shifting downward support. And that, of course, could be a sign of more ranging to come, or perhaps some long positions. We could also use the commodity channel index, which we're looking at here, to help us decide whether or not the market is moving with momentum in a certain direction. And we saw here when the commodity channel index broke outside its range, we did, of course, see a short position arising as a result. Similarly, it happened in a long manner just here. So the commodity channel index is ranging at the moment. Depending on what it does, we could look for more positions, or it could be confirmation of the same. So we hope that's been of help. If you have any further questions, please do not hesitate to get in touch. We welcome all inquiries. Have a terrific day. We'll catch you soon, and as we say here, keep learning.